drawing close to a decision that is going to be taken on the Nifty Rejig, which comes into effect from October, and brokerage houses have started drawing up their list of possible entrants and exits from the benchmark index. Yatin Mota is here to take us through the likely candidates. Yatin, good afternoon. How do these names come up? Are you scanning some brokerage notes?
Yeah, so we have referred to a couple of brokerage notes, and IDBI Capital as well as MK have come out with their notes on the possible Nifty inclusions and exclusions. But let's really understand how the Nifty inclusion criteria or exclusion criteria is made up of, or how does the review really happen. It happens twice a year based on a 6-month data point, and more importantly the trading history is the 6-month period in which the calculations really happen. More importantly, there are a few criterias which need to be met. Number one is that the impact cost of a Nifty company should not be more than 0.5%, or 90% of the time the impact cost should not be more than 0.5% for a 10 crore basket, which means that if the share price is 100 rupees and if you were to buy or sell shares, it has to be in a range of 50 paise, so that the impact cost is not more than 50 paise for 90% of the times when you are buying shares of 10 crores worth of value. Also, the constituent should have a derivative contract at the National Stock Exchange, which means that it should be a tradable company on the future and option segment. And number 3 is the most important criteria, is that the Nifty inclusion candidate should have a market capitalization or a free float market capitalization more than 1.5 times the smallest constitution. So whichever is the smallest constituent of the Nifty 50 companies, the free float has to be 1.5 times more, which means that every time when an inclusion happens, the free float of the Nifty 50 improves. So that is the third and most important criteria. And based on these criterias, brokerages usually come out with the brokerage note. So if you look at the most likely inclusions which are there this time, is Britannia Industries, JSW Steel and Godrej Consumer. Of course, IDBI Capital also has come out with a note. They say that the most likely inclusions would be JSW Steel and Godrej Consumer, and probably this explains the kind of move that we are looking at for both JSW Steel and Godrej Consumer in the past few sessions. Today a 6% move up. So probably the market is anticipating that Godrej Consumer will be a Nifty constituent very, very shortly. And on the exclusion side, we have beaten down names like HPCL and Lupin. HPCL of course has been at a multi-year low. Lupin also did not do well when it comes to the pharma pack, has been underperforming. So both of these two stocks are expected to be the Nifty exclusions this time by both MK as well as IDBI Capital. And if you look at the YTD charts, clearly you can see the kind of divergence which is coming up on your screen as to how really the stocks move and outperform versus the ones which are being excluded. And also finally, this rejig will happen by the month end. So 31st July, there will be a list of stocks which will be added and excluded from the Nifty 50. And by somewhere in October, the effective date will come in for the reset. So probably by month end, we could have stocks like JSW Steel and Godrej Consumer coming into that Nifty basket.